Okay, let's see. All right, we got 14 participants. Good morning, you guys. What's going on, everyone? Happy Saturday. Hope you guys are having a great weekend. What's going on, Dean, Alfredo, Brandon, Clay, GN, hello, Jay Kean, Matt, Michael, Neil, Tony, Wendy, Jason. All right, so you guys can unmute yourself. If you want to ask questions, any comments, whatever you guys want to say, the floor is open. So go for it, man. What's going on, guys? Yeah.
I got a question about AMD. So obviously we've seen the semiconductors come down quite a bit this last week after nice run up. Nvidia's kind of also on the way down. What do you foresee with AMD? Typically, there's a nice little run up to the earnings. They just had the news with all the new products. We still have Xilinx in the pipeline. What are you thinking that where we're going to be headed to here maybe in the next week to 2 weeks?
Well, I mean, when is earnings? When is it? Do you know?
It's the end of the month. I think the 26th. It's that. Let me see here. It's the Wednesday. Let me look at my calendar. I believe it's Wednesday the 26th.
Yeah. Okay. All right. Let's see. Yeah. Traditionally speaking, I mean, NVIDIA has always, not always, but it's traditionally over the last several quarters have run up on earnings. So, except this quarter here earlier last year, April 2021, it dipped. But it finally, I mean, it just broke through the $100 mark and, hit a high of 163. I don't want to speculate on how much, what the earnings will be like. It's just something that I really never dig into as far as the fundamentals go for AMD or NVIDIA. But these type of these companies, AMD and NVIDIA, their charts are very, very similar, right? If I just, you guys can see my screen, correct? Okay, so if you guys just take a look at NVIDIA, what's going on with NVIDIA, hit a high of 346. And as I said in my charts before, that this 271 mark is critical for support. You can see that this fib line has held since December 14th. Okay, so this has been critical. And for me, I'm just tracking the market sentiment right now around tech, and mostly we've been playing QQQ. So if the QQQ continues to dive, then it doesn't really matter what the fundamentals are behind NVIDIA or Advanced Micro Devices, right? It's traditionally these companies will follow the path of the market sentiment around tech. One of the things that I've been tracking, I've been looking at also is a 10-year bond rates. And if I can, hopefully I can pull it up here. Trading View, Genius, excuse me. If you guys are on TrendSpider, does not have charts for 10-year US 10Y, but if you go to tradingview.com, it has it. And so I've been kind of tracking this, right? So this blue line here, or semi-blue line here, or baby blue, whatever it is QQQ. Okay, so you can see that as the interest rates are rising and it hit a high of, 1.79 the other day, or on Friday. That's what's causing a lot of it. That's what's causing the tech to take a dip as well. So if you just pop over to the 5-minute, let's just do a 1-hour chart here on the US 10Y. So look at what's happening here, right? So as interest rates are rising, the QQQ is going to go down, and that's going to take the tech companies down as well. Certainly, I'm sure if there is positive earnings beats expectations, maybe even better guidance going into, or less ominous tone regarding supply chain issues and chip shortage, all that, then yeah, you could see tech bounce with these companies, AMD, et cetera. It'll definitely lift up QQQ as well. I believe Amazon too has earnings later this month or even in February. So we could, for sure, I would be optimistic going into earnings and see how it goes. However, if they say the wrong thing, or they miss out on, maybe they don't beat the earnings per share, revenue beats. Typically what happens is revenue beats, but they miss on EPS. If that happens, then it's, then that's going to take tech with it. But I mean, going into this week, we have this, we have the catalyst of the CPI, right? Consumer Price Index. So we'll see what that is like on Wednesday. It drops like, I believe, 8:30 a.m. on the Eastern time. If that is worse than expected, then we're going to see some bleeding into the rest of the week. However, my sentiment, at least going into Monday and Tuesday, it is pretty bearish. People are going to, the market's going to be pretty jittery about the inflation data. Cool. All right. I hope that helps. All right. Anybody else? Go ahead. Feel free. Luke, there's 28 of you guys online. All right.
Rock, quick question. Based on all that you just went over, like the yields and so forth, which are pretty important, the interest rates and all that. What about the commodity side? As far as like copper and aluminum, steel, I know AA Alcoa had been on a good run. What's your take on that side?
I don't track commodities. It's just never, it's not something that I look at or care too much about. But yeah, I mean, maybe I should look into that. But yeah, I mean, if I were to look at Alcoa, okay, looks pretty good. So yeah, unfortunately, I don't track that.
Gotcha. Okay.
Yeah. JJM, it's good to see you.
Yeah, I'm finally able to make it too.
Yeah. I remember you messaging me about lithium, or not lithium.
Uranium.
Uranium. Yeah, that's right. Okay, gotcha.
Yeah.
You're the commodities guy. Okay.
Yeah, and uranium's starting to perk up a bit, and then with the hostility that's going on right now in Kazakhstan, which holds, I think, the largest producer of Prom or something.
Yeah.
I don't know. There's something going on in there where uranium the spot price could possibly spike pretty quick, start moving up pretty quick. But I mean, who knows?
I mean, the only thing I really look at is it's precious metals. So I tend to look at gold.
Same here.
so I have a bunch of gold holdings, like physical gold. So for me, it's pretty important to see this thing pop over $2,000. Finally. So it's been up lately, a few bucks here and there, 1180. So I'm looking for it to pop 1800, whatever. Looking for a 2000 breakout or something.
It's gonna get there, Rock.
Yeah,
it's gonna get there.
Okay, buy more. Got it.
I just don't know when, right? But it's gonna be sooner than later, though. But it will get there.
Yeah.
If you look at the quarterly, I think the quarterly in gold futures, you'll start seeing, even the weekly starting to look a lot better. Like it's finally. I don't know what the correct term is, but it's building like some kind of a trend line setup, but something. I'm not too familiar with all the terms, but it's getting there.
The monthly looks pretty good too. The monthly is kind of curling on the gold as well. So I'm looking on my Weevo app here. Looks pretty good. Okay, I'm excited. Buy more gold.
Yeah.
All right. Who else?
I got a question. This is Dean. Hey,
what's up, Dean?
I've just been with you for a week now, so I also have TrendSpider. I'm curious about the different indicators that you're using. Is there anywhere that you have your indicators listed that we can kind of copy and paste a little bit? Or
okay, so typically, I've done a bunch of video tutorials on StreamYard, and I post them on the Dropbox link. So if you see your welcome message, there's a Dropbox link of video tutorials, and you can see all the various indicators I've used and still use. But for right now, if you're looking at my chart, I only have ATR trailing stop. I have the I'll tap my indicators here so you guys can see. And I don't display all of my indicators all at once because there's just too much to look at. But I'll use the EMA Ripster clouds. I use SMA So here's MA Cloud by Ripster, SMA 821. Okay, that's what I look at on a daily basis here. And then the MA Cloud of 3450 also using SMA. Okay, now on my other screen behind me, I will use EMA because I use those screens for day trading purposes. But I'll so in TrendSpider on my day trading laptop or screen behind me, I will use EMA 915 cloud and then also 3450 EMA clouds. Okay. Other than that, on the daily chart, I do like the volume profile on the right. It's pretty nice because it also shows you the point of control, the purple line here, and the daily VWAP, all right, which is right about here. All right. So you can see, at least on Alcoa, for example, this is the point of control, decision point in the market. And this is pretty much support, right? So that's all I have really. And then right now I'm trying to get used to using ATR as well. I did a video last night. I sent it out last night.
Yeah, I watched that. That's good.
There you go. Right. And you can see the volatility on whatever stocks. It's really interesting to watch this price action in the ATR. It's quite unique. For everyone who hasn't watched it, check out this ATR trailing stop. I mean, it hit it perfectly on QQQ on December 29th and then fell, right? So that's a trailing stop. So that's pretty much kind of serves like a resistance in a way. Look at ATR trailing stop on November 29th on this candlestick here. Touched it perfectly as a support, but fell back over 2 days later. If I trade it with, for example, QQQ on the 1 hour chart, you can see the trend, the ATR trailing stop line is a heavy resistance going forward. So let's see what happens. Now, if you want to take it down to, let's say, 15-minute chart, you can see that we're still trading below this blue line here, which will be a resistance, which also is pretty useful in terms of, let's say, a stop loss, right? That's what it is. Let's say, for example, right, we get into a call on Monday and we think it's going to bounce. Or I'm sorry, we get into a put, okay, put situation. And let's say on the 15-minute chart, we trade it and all of a sudden it jumps up and a candle closes above this ATR line, all right, at 381, then we cut loose, right? So it could be a good way to measure or to, to set a stop on your puts or even calls, right?
And when you're putting out some of your scalps and stuff during the day, are you trading on the 15 or are you trading on the 1 minute chart?
I usually trade off the 5-minute chart. So I mean, during that trade, I'll also look at some bigger trends like 10, 15-minute or even 30-minute. So that way I could, just stay in the trade and not freak out on every single dip or rise, depending on which call or which option I'm in. But majority of the time, yeah, I'll use the 5-minute chart, and I do use Webull as well. So I have Webull on my screen as well. So
thanks.
Yep.
Hey, Rook, I have a question for you.
Sure.
What are your take on the OCGN? We are still waiting for the FDA approval, but
Yeah. It's
this
so
Monday, the CEO is going to have a presentation or something like that.
I haven't heard about the presentation, but if they do, great, fantastic. But we know that they've already filed. They tweeted just like, I believe early last week, that to clarify anything that was going around in the media. But they did say that they filed the EUA already. And we know they did back in November. The problem with EUA is that there's no specific timeline. You would think that emergency use authorization would mean that, hey, FDA might speed up the review process, but it's really at their leisure, right? Typically, from what I've seen before, it's like 4 to 6 weeks for EUAs to get a decision. And we're beyond that 4 to 6 weeks. And the market is absolutely impatient with things like this. So yeah, we're back here at $4, which is literally, goodness gracious, the lows, you can see we filled the gap here already, filled the gap all the way down to 586, and we're continuing lower. Gosh, you don't want to see this thing break $4, but I mean, it's highly likely only because the market for small caps is so darn weak, right? I mean, Fubo is at $14, and it's just it blows my mind but that just kind of proves it doesn't matter what we think about the companies and its future prospects, right? The market's going to do what the market's going to do. Yeah, unfortunately. So now, should they get a EUA? I think it'll pop off. Yes. How much it'll go back up, we don't know. I mean, it can squeeze really hard. I mean, we've seen OCGN squeeze really hard before. So it's just a matter of when they're going to get that EUA and you know what the market thinks of it.
Yeah, I know. Thank you.
Yep. All right, who else? Don't be shy.
Hey, Rock, this is Gary.
What's up, Gary?
Portfolio management question. Monday morning, you got like 10,000 in your port. For a day trade, how much are you recommending spending on that first day trade Monday morning, as an example?
Well, I mean, that really depends on your portfolio size and the percentages that you stick with, right? So typically I will, let's say I have, 100K, for example, to trade with on Monday morning, right? Buying power, my rule has always been around, 5 to 10% per day trade. All right. So, and if you exceed that, or you blow that first trade and you're down quite significantly, you need to step back and just, reevaluate. But, I mean, for me on Friday, I did my first trade and that was a fail. My second trade was a fail. So I stopped. I completely stopped because I did not want to give away any more of my gains on the week. So, I would say 5 to 10% of your buying power could be used for your day trading purposes, but no more than that, right? Because after that, 10, 15, 20% of your port on a day trade gets pretty scary. Especially,
all right, thanks.
Yeah, especially when you're playing a close expiration Q call or Q put, you can lose that really fast. You can be down 50% in an instant if Qs started to, go against your direction. Yeah. All right.
Hey, Rock, what's up, man?
What's
Zeus?
Zeus, hey, what's going on, man?
How are you?
Good to hear your voice.
Yeah, man, you too. Hey,
yeah.
I'm a big proponent of, just day trading Q, up, down, but are you looking at anything for like further out puts since you're kind of feeling that drop possibly to 350?
Yeah, so this is going to get interesting. So the reason I have this assertion, and I want to be careful too, right? I mean, I get into this mindset where like, oh, Q is definitely going to go this way for sure. The chart says it and this and that. And then I get myself in trouble too. When it comes Monday morning, it bounces to 390. But, as far as what I'm looking at the chart here, right? We know that there's as far as a daily volume shelf support. And so this is a reason too why I like to use multiple indicators on my chart, not just rely on, one or two. But we got a volume shelf here and that held for the most part around the 380 area on Friday. But if it gets weak, then you have a volume gap here and a volume gap here. And finally, the big shelf is right here. Okay, this is point of control at 365 range. Daily VWAP is approaching dangerously at 375. So if the market continues with selling pressure on the downside, then yeah, we're going to see these support levels break. I would say 377 and 375 is our key areas to hold going into Monday and Tuesday. If not, then we're definitely going lower. But to answer your question, I wouldn't buy long puts because the market can be irrational too, right? If you buy long puts and then overnight there's great news about Omicron or there's interest rate drops, then there goes your puts, right? You would be down instantly like 50% overnight. Now, what I would do is I would say because the CPI data is coming out on Wednesday morning, I would probably load up on some puts on Tuesday afternoon and hold it overnight, right? And see how it performs, right? Because I'm expecting inflation data to be pretty bad. So if that happens, then yeah, you're going to get a big drop at the bell with Q. So in short, I'll play like an overnighter for a catalyst, but I wouldn't, play any like long, like a monthly out.
Copy that. Thanks, brother.
Yeah, for sure, man. Good luck with your girls today, with your daughters.
Oh, dude, yeah. Well, my wife, I think she's on her way home now from the beach. So.
All right, awesome, man. Let's see. Yeah, okay, yeah. Well, I mean, that's the thing, right, Evan? Thanks for the comment there. I mean, when everyone starts panicking, then I can get a good sense that okay, some of you guys went overboard with your position size. So just be careful when you're playing Qs, when you're playing SPY. These things can get very volatile quickly, right? So exercise good risk management. Don't play. Don't go 20%, 50% on a report. Don't YOLO it. Don't, let's say you made $2,500 on a day, right? Your next trade should be no more than $2,500, okay? Or maybe just if you want to be even more conservative, just play with half of $2,500, which gives you $1,250. And if you make 20% out of $1,250, now all of a sudden you're up $3,000 on the week. So or on the day. So just be careful. And let's just say, for example, you're up 2,500 on Monday, right? And then you take another trade for 1,250 for 1,200, half of that, and then you're down 30%. Okay, and you're like, okay, forget it. I cut losses. Okay, great. You're still up on the day, and you're still doing pretty good on a day. But it's all about good risk management, you guys, and so I can't stress that enough. What's up, Brian? Okay. Why do I think Apple is going to go up? Okay, so Apple and Moo, at least those two on my radar, are the ones that seemingly over the last couple of days have done pretty decent in terms of holding support. Okay. As far as Apple goes, we do have, it's kind of critical too at this point, right? It's at MA34. All right. So we got a lower wick there down to 34 MA. You have your trailing stop ATR at 169. So this is a situation where I would like to take calls, because if those levels hold, right, not only that, it gives my visual on my chart here gives me a good area for exits. Okay. So if I got into calls for, let's just say 175, 172.5, and I decided to do a long call. All right. And I'll do like maybe March, let's just say March. Okay. Which will give me time. And if it consolidates above 169 and 172 and just kind of hangs on the area, even with the market being kind of choppy, I think I can deal with that, as far as reward to risk ratio. Same thing with Moo, right? If you guys take a look at Moo, I drew a line here, this black line here, which is my support. And it actually hit that support line literally down to like within 10 pennies on Friday. And so I'm not in Moo right now, but I'm watching this line to see if it holds. Now, if it breaks it close under, then crap. But if it hangs out above this 93.80 line, about 93.90, then I'll be willing to take a call, because my thinking is if it holds this line, that means there's great support. Bulls are in control, even though the market's shoddy. But if it trends like above 93, 94, great, then I can take some calls. But then I would have to buy time. So it would have to be definitely monthly calls, for give the market enough time to turn around, or bounce, etc. Yeah. But as far as like why I think Apple will, because it's not like, for example, like it's not like NVIDIA, right? I mean, you can see, I know two separate companies, but you can see NVIDIA continues to break support below 821.3450. Now we're trading near the 0.5 retracement. So this is a situation where I'm like, okay, there are greater rewards on the downside for NVIDIA. And I do feel that there's enough reward on the upside for Apple, because it is not trading like the market, if that makes sense. Same thing with Moo, right? Same thing with the Moo. Yeah. Cool. All right, we got 40 of you guys on. It does. Okay, yeah. Okay, cool. Glad you agree with me.
Hey, Rock. Morning. It's Andrew here.
What's up, Andrew?
New subscriber. I
Welcome.
know you love Lucid. I love Lucid too, but I remember seeing a tweet back then about GGPI Polestar. But I don't have too much history on your thoughts of that. Could you share a little bit about what you think about that opportunity?
Yeah, I mean, I don't hate Polestar. I think, I mean, the fact that they can produce cars, they, let's see, 1129. Let me take a look at the float here, 80 million float. Okay, so the fact that they're producing cars already and it's backed by Volvo, I get it, right? I personally seen Polestar cars on the road. I don't think they're great looking cars. Certainly, there's concept cars and they're coming out with new cars. But personally, it's just not a stock that I'm interested in right now because they are trading near redemption value, which is pretty much $10. It doesn't give me a lot of hope to buy into it now and hold through the merger. Once it merges into whatever in the new tickers, then I would be more interested because you're dealing with a lot of like, okay, what, there's going to be lockup and what are the terms of the merger, all of that stuff. And we've seen all that drama with Lucid, right? With CCIV going into Lucid. The reason why CCIV was so popular earlier last year was the fact that this is a company that's been in the foreshadows of the EV market, waiting to execute, waiting to produce, waiting to pop off and start delivering cars. And we've seen that they finally did this year, which is very exciting to the market, right? And the public, I mean, I think the money is starting to move from Tesla. Because Tesla's on a downturn, right? So money's starting to move into Lucid because the market is expecting or has a certain opinion that Lucid might years down the road be in Tesla. They have manufacturing facilities in Arizona. They're opening up one in Saudi Arabia. Now they're going into the European market as well. So I think there's a bright future for Lucid. Certainly, I do feel that there is a bright future for for Polestar as well. They got a studio literally 3 doors down at the Valley Fair Mall in my area here from Lucid. So they want to compete with Lucid as well. But know that GGPI and the cars that they make is a completely different segment of the market as well, right? They're inexpensive, about roughly 35 grand, okay? But right now, there's just not that much excitement regarding the stock anyway. I know that Twitter pumped this thing to like $16 by you-know-who, and now it's back down to 11. So this thing is pretty dangerously close. You just get one bad day on the market, this thing will come back down to, closer to 10. I just don't think it's worth a swing for me right now.
Hey, thanks.
For sure. And plus, I just don't like that guy on Twitter, so. I'm kidding. Wendy, I want you to speak. What's up? I know you're there. Wendy D. Duplantier. Speaking of Planner's at 16, you guys.
Duplantier.
What?
I said it's pronounced Duplantier.
Duplantier. Ooh, that is unique. I like that.
It's French.
Oh, it's French. Okay. Well, rock is pronounced rock, so. All right.
I'm just pretty much listening. I'm still learning, trying to get all my indicators right.
Yeah. Okay.
Trying to figure out which ones are going to work for me.
Okay. Well, do you have any specific questions? What indicators are you working with right now?
I'm trying to figure out the clouds.
The clouds?
Yeah, I've been looking through all the videos. There's so much that I feel like I'm boggled. I'm watching so many things that I can't get one thing down.
Okay. Well, maybe you could send a screenshot of your chart to me and we could talk about it offline. But I mean, as far as we're talking about the Ripster clouds, right? The Ripster clouds, all they do really is they're a form of support and resistance, just like simple moving averages. It's just displayed differently. And it gives you this kind of sense of, okay, so for example, if I'm looking at Planner on the daily chart here, and we can see that the prices continue to move downwards, right? And you can see where people are scalping Planner because you have these long upper shadows within my 8 to 21 cloud. So you can see that the 21 is a severe resistance for Planner, okay? When we were playing charts, reading these clouds, it gives us visually idea of where to sell, okay, and where to buy, right, or where to short, or where to place puts, right. So, for example, if I don't play Planner, but if I were to play Planner, just over the last couple of days, we could see that every time it hits the 21 cloud, okay, this red area here, it gets shorted back down, right. So we could have said 1853. 1853, and then it drops $2 on that day, right? That was an excellent put opportunity. Quiet. And so you know what I mean? So it's a great way to visualize your trade. That's why Ripster designed it, and it's really cool.
Right.
Yeah. So, but let's say, for example, right? Let's say if Planner, by a miracle working God, closes above this cloud. Let's say it closes Monday, right? And bounces. It closes above 1836, which is the MA21 cloud. If it closes above that, I would be interested in calls because you got some strength there. And where would I sell those calls? For example, I would sell the calls if the price gets back into $19 and within this shaded area, which is a 34 and 50 moving average, right? I don't think Planner will ever get there for a while, but it is what it is. But then let's say if I did place that call above the 21 moving average, I would use that as a form of support for my call, right? If for some reason it jumps over the 21 MA on Monday, and then I buy a call on Tuesday, okay? And I would use that 21 MA or 8 MA cloud, that area, this shaded area right here between 1790 and 1830 as my support for those calls, whether to cut it or not. Okay. But if it, so I could use this multiple ways, right? So if it continues on an uptrend above the 21, then I should be okay on my calls because why? You're going to start seeing the MA 821 start curling up. Okay. As the daily goes on.
That makes sense. I'm starting to understand more now.
Yeah, for sure. Feel free to, it just takes getting used to and thinking things through. Let's go through. Let's talk about QQQ, for example, since we're making our living on QQQ. You can see that the Q is in a severe downtrend, right? I mean, it's trading way below any of my clouds here. So does this mean like, okay, it's going to go straight down forever? No, of course not. It just means that obviously it's in a downtrend and placing calls or long calls would not be a good option or would not be a good play unless you feel tremendously that Q is going to bounce back over 400 anytime soon. And even though that's risky. But what we can do, the reason why I'm not placing long calls, et cetera, because there's no indicators up here that tells me that I should be playing any long calls, okay? Even long puts are a little bit risky because you never know when it's going to bounce. So that's why, for the most part, we just play on the 5, 10, 15-minute chart and daily scalps. Okay, because on a 5-minute chart, you can easily see where your support and resistances are. Okay, so if we just take a look at the cloud, you guys leaving? Okay, I'll see you guys later. Once it dipped under this cloud, right? Okay, easier said than done. Whenever you're trading live, it's just, when you step back, look at it, okay, that makes sense where I made my mistake. But once it broke this cloud, it was for sure, right? I mean, it just continued downwards way below the clouds and finally jumped up here. And this is where a lot of people started to buy calls, to buy the puts, or I'm sorry, calls up here. It hit this 3450 cloud, but then you saw that was pretty weak, right? So that 50 is a severe resistance, and it fell here, right? And then it tried again, failed downwards, and it finally popped up pretty good towards the end of the day, but then got sold off again. So you can see that any pops with Q and the indices or ETFs right now, they tend to get faded pretty quickly. And the reason is that there's not a lot of optimism, right? Going into next week. There's just not a lot of optimism. So basically, then now we just adjust our playing style. We depart from long-term holds or swings, etc., on commons, and we just play these daily scalps because they make good money, right? Okay.
Makes so much more sense now that you've shown it to me. Thank you, Rock.
Yeah,
Appreciate
of course. Anytime you get confused, just message me. Okay.
Right.
Yep. All right. Do you have any literature for recommend for trading or the markets? Sure. If you go to Amazon and just type in like stock trading, there's like 1 billion books on Amazon. Just pick a few. But pick a few that you want to focus on. So for example, day trading, type in day trading, stock trading, whatever. It should pull up Andrew Aziz, AZIZ. I highly respect him as a day trader. So Andrew is a pretty good one. If you like swings, look for a book called How to Swing Trade for a Living. That's another one. Andrew also wrote that one. Steve Neeson is a big candlestick guy, Nison. Steve Neeson or Neeson, whatever. So he's a big candlestick charting pattern guy. So you should definitely look into that as well. So start there, and then eventually you'll kind of grow out of that, and you'll be ready to take on other indicators. Like if you really want to get advanced, go for Elliott wave theories. There's a lot of Elliott wave books out there. There's even one that's very short and very dumbed down version, which you can read in like almost 2 nights. So sorry for not my $2. Would you? Here's when you decided to go to full, make a move from corp to full-time trader, and maybe how you manage home life trading. He has a lot of reference material attached to the pin. Yeah. So Brian, to your message, I landed in trading almost on accident, if you will. It was just something that when I left corporate in 2010, I turned 30, or I was nearly 30, and I've worked in corporate since I was like 16. Okay, so I got my first job in high school working inside a corporate environment. Okay, so doing customer service, call center stuff, no big deal. But so I worked in there. I worked for that same company for over 12 years here in the Bay Area. And when the recession hit, if you guys remember the housing bubble, when the housing bubble hit, the company decided to move to Connecticut, and I was like, no, Connecticut's too cold, thank you. So I decided to take the severance, and so I took the severance and decided to put a chunk of it into a trading account and investment account. And at that time, it was mostly E-Trade, TD. There was no brokerage-free commission apps, right? Every trade was like $6.99. So I started to trade Disney. I know someone's asking about Disney right now. I started to invest in companies at that time, and I started to learn. And then once I officially left corporate, I knew that like, hey, this is what I really want to do for a living. Now, I couldn't live off the trading at the time because my account wasn't that big. Right. So you have to build your account over time. This stuff takes time. So I had to do other jobs. Right. So I did sales. I did direct sales. I did a lot of stuff on the side as an entrepreneur just to make a living. I think one of the catalysts that drove me to exceed in what I was doing, which was trading, investing, was the fact that, I had a separation, divorce. I had 2 kids with me. I really wanted to provide them a better future. So I worked my tail off, right? I worked during the day to to provide for basic, everyday expenses. And then at nighttime, I would stay up and study. And lo and behold, 10 years later, here I am. So am I saying that I officially made it and I'm super successful than all of you? No, it's not. It's always a learning process. I'm always learning. You guys can see there are times where I suck when there's I misread the cues or misread the indicators. But it's all about learning. It's all about continuing to get better at what you do, learning from your mistakes, and also continue to practice good risk management. A lot of people get very frustrated inside the group chat. I can see it, right? Because you're dealing with smaller account. You want to grow that account fast. And this is why we do these Zooms, right? I do these educational videos, all of that every single day for you guys, because you have to learn. You can't just take my alerts and believe that you're going to be a millionaire. You have to learn for yourself too, right? Because that's what's going to take you to another level. And I hope that this community provides you the education and the support. Yeah. Okay. All right. No thoughts on this. Well, I mean, this, let's talk about Disney. Yeah, Disney's strong. I haven't really looked at Disney, huh? Look at this. Closing above the 34.50. The 8's about to cross the 50. The 21's crossed the 34. The 8's looking pretty good. Why is this running up? All right. Omicron's no big deal. People figured it out. All right. Maybe people really started to like Disney. Cool. 164 looks like a resistance and the gap fill. This is going to be interesting. Okay. Yeah, I just haven't looked at this in a while. All right. Okay, so we're going on to 41 minutes online here. I'll take maybe one other questions. I think we can call it a day, unless there's more questions. Jen, if you want.
Yes.
Yay, what's going on?
Hi, how are you?
I'm doing good.
Okay. Rod, I was looking yesterday the new indicator, the ATR, and I have a question because I use Trading View.
Okay.
And I know that your video is from Train Spider, right? So for the stock trading, I found a lot. I don't know if did you test this one in Trading View? Did you have anyone that you like it?
What do you mean? Huh? What's that?
Those one, right? You have so many selection. I was playing each one to see which one looks as yours in the video.
Yeah. So the official built-in for ATR and Trading View is this one here, average true range. Okay.
Yes.
As far as ATR trailing stop, they do have one here, but it's developed by the community. These are community scripts. So I have not tested community scripts. Okay. You could definitely try it out. I can't imagine it'd be wrong or anything like that. But you look at this trailing stop green line, looks pretty legit here on a 10-year. Let's hop over to QQQ, for example, on the 1 hour. Let's do daily here.
And especially if you go to the setting, they have additional information that in your video, for example, I tried to change for what you said, multiply by 3, but that is what confused me, that they have 3 options and in yours, you only have 2, right? You change multiplier and the length.
Right. So every, when it comes to community development or their scripts, it's definitely, they have a variety of options. Like, I don't know what HHV period is.
Yeah, that is what confused me.
Yeah. Don't worry about all that. But just go with what you know, ATR period and multiplier, right? ATR period is the simple moving average, right? So you can say, usually people use 14.
Yeah.
All right. And then multiplier is usually 3, or you could say 2.5 for a tighter stop loss, right? It's based on your preference, right? So if you say 1, okay, that might be too little. Let's just say 2.5 here. Okay. And there you go. Yeah.
Okay.
Yeah.
Yeah, because I tried to compare with what I saw in the video and I said, okay, I'm confused. Thank you, Ron.
Right, no problem. So for example, right? So let's say we did do a put on QQQ again using the ATR stop loss here. We would put a stop right here, literally at this line. I would say if it closes above that, then I'm screwed. But if it continues to trade downwards, then I can hold on to the puts. I think it's ATR stop loss is a beautiful way of determining when you should cut. I mean, of course, you can still use simple moving average, all of that, or the clouds, for example, and I still think those work. I don't think you should use any particular indicator all by itself. You should obviously learn to read candlestick patterns. That's the most common, and also, couple that with other indicators to help you along the way as well. So let's say, for example, QQQ, and I'm going to go ahead and adjust. Actually, I should probably adjust my ATR here. Alpha trends. No, thank you. Where is it? Let's see. ATR trailing stop. There you go. 14 and 3. So I got 14, and maybe I should take this down to 2.5. Let's see what happens here. Okay, a little bit better here, and then I will move over here on my 5-minute chart, and same thing. ATR trailing stop. I'll do 2.4. Yeah, 2.5 is good. Okay, so there you go. So if I were to trade this on a 5-minute, it might. You see how the stop is a little bit tighter. Earlier it was about 381, and now it's on the 5-minute anyway, it's 379. Okay. Now, if I want to give myself a little bit of room, just to kind of show you guys how this changes. Let's just say I did 3.5. I don't know, you can. Yeah, you can. Okay. So now 3.5 is over. Where'd it go? Well, 3.5 is down here. Oh, 3.5 takes it down below, so that's support. Okay. Oh, interesting.
Yeah, I think 3 was perfect. Was hitting with the reverse of the candle.
Yeah, there you go. Okay, right about there. Okay, so 3 is at 379.88. 2.5 would be slightly lower. At that point, I don't know how much that matters, but yeah.
Yeah. Okay. I will. I guess I still have option to play in TradeView. In TradeSpider. Free in the free version to compare both.
Yeah. Okay. Go for it.
Okay. Thank you.
For sure. Yeah. And you guys can see on this ATR here, trailing stop. I mean, people were playing puts on the downside, right? You can see it. And this was a stop area. You could literally see it. Like this literally touched the ATR stop and then bounced, which is pretty darn interesting, right? Breaking below all the clouds here, stops here, and then bounces up. And then, of course, gets hit by this resistance here, which is that's a simple moving average of 100. So the moving average 100 got rejected and continued to move down. And now that's a form of resistance. Pretty interesting. Yeah, it's a pretty good tool. Definitely recommend that you guys give that a try as well. All right, so I think that's it. 8:47 or 12:47 Eastern time. I think that's good for today. Have a great weekend. Wait, hold on. All right, couple questions. Thoughts on futures, thoughts on this. How do you get QQQ line on your trading view chart? How do you get which QQQ line are you talking about? I know you were in Stern, seemed to be fairly high. What are the thoughts on it? When the markets go, it gaps down. They didn't have an offering, did they? No, what was the catalyst? They came out with some type of catalyst 3 days ago. They partnered with a major healthcare company, no terms disclosed. The markets hate that kind of stuff. What does that mean? You partner with a potential healthcare company. Nobody knows what that means. All right. So yeah, the IPOs are getting hit again. I would not be touching the Stern again. I'm glad I got that little bit of pop to sell off most of my position. And then I finally got rid of it. It's just not worth it to hang on to it. Now it's under 5. If at least 550s and 575s held, that would be okay. But no. But also, of course, the market, now that they partner with a new company or this healthcare company, well, they have an S1 registration in effect. So that means they can drop an offering too. So the market's just like, no, thank you. Right. Okay. All right. Hey, what's up, Coach? Good to see you. Good to see you, Coach. What's going on, man? You guys should follow Coach on Twitter, man. He's awesome. He trades Microsoft for a living, just like I trade Qs and Teslas for a living. He trades Microsoft for a living. All right. So, yep, of course. Thank you, Wendy. Thank you, Jen. Thank you, Neil. All right, guys. Have a great weekend. I will catch you Monday pre